What's up everybody, I am Jaspreet Singh, and what I want to do today is I want to go over the 20 laws of money that you need to understand if you want to become wealthy. These are things that every wealthy person understands, and some of them might make you feel a little bit uncomfortable because they're not normal. But money is not emotional. It doesn't care about your feelings, which is why you need to understand these 20 things. So make sure you watch this video until the end, and let's start with number one. Money law number one is you get what you earned, not what you deserve. Do you ever notice how wealthy people never say, I deserve my wealth, I deserve my millions of dollars? No, they always say, I earned my wealth, I earned my millions of dollars. On the other hand, what do broke people say? They say, I deserve more money. Now, what you have to understand, you're wealthy in your mind before you're wealthy in your bank account. Just like that, when you're broke in your mind, doesn't matter what's in your bank account. You're broke if you have a broke mindset. I have a lot of friends that are doctors. I was supposed to be a doctor too. And what's common with all of my doctor friends, every single one of them, every single one says that they deserve more money. I worked so hard. I had to go through all of my education. I had to rack up all these student loans. And now I'm working my butt off. I deserve more money than I'm making. Every single one of these doctors is making a good salary. All of them are making at least 6 figures a year. Yet everyone says that they deserve more money because of the work that they put in. The way our system works, hate it or love it, this is how the system works, which is why you need to understand it. The way our system works, you are not compensated by how hard you work. You are compensated by the value that you provide. If you were just solely compensated by how hard you work, the highest paid people in the country would be construction workers. But they're not. The more value that you provide, the more money that you'll make. The reason why a doctor makes more money than a cashier at McDonald's is because you have way less people that can do the job that a doctor does, and it takes a lot more work and a lot more skill to do what a doctor does than to do what a cashier at McDonald's does. And the reason why Jeff Bezos makes more money than doctors is because he created something of value that nobody else can do, and because it is so valuable to so many people, he is able to make more money in this economic system than doctors do. Look, I'm not here to make friends. I'm here to educate. And you can cry and scream and complain when you hear this, but the reality is this is how the system works. So you can either hate it or understand it. The great thing is when you understand it, you can capitalize on it no matter what position you are, whether you work at McDonald's, whether you're a doctor, or whether you're Jeff Bezos. None of this means that you're any less important because you're a cashier or a doctor or you work at Amazon. The difference is the amount of money you make is going to depend on how much money you earn, not what you deserve. Second, flexers are losers. There's a very good business book out there called The Blue Ocean Strategy, which essentially says that you want to create your own product. Stop trying to compete with others and create something different. That way you're not in this bloodbath of trying to compete with a whole bunch of businesses by playing the same game as everybody else. I didn't realize this until I read the book a few years ago, but one of the biggest reasons why I was able to invest so aggressively when I was young was because I followed this blue ocean strategy when it came to my personal finances. When I was in college trying to become a doctor, I started an event planning company. Essentially, it was a party promotion business where I was working with clubs to host parties there. The entertainment industry is all about the flex. It's all about how you show off and how you look. Back then there was no Instagram, but if there was, I can't even imagine how it would be with everybody just constantly posting pictures of what they bought and their clothes and their cars. Everybody in my close friend circle was in this industry and everybody played the part. Anytime we had a good party, all of my friends would go to the mall and then they'd start spending the money that they made. We'd go to the Gucci store, the Louis Vuitton store, and just start spending money on dumb things, belts, wallets, scarves, just things that didn't have any value, and they're spending hundreds of dollars on these things that did nothing. Now, I was a different person then too. I used to wear colored contacts. I used to always wear a dog tag. I used to wear a white belt and white shoes. I was a different person, but I knew that I didn't want to spend all of my hard-earned money at the mall on these dumb clothes that weren't gonna make me any money. I was playing a completely different game. All of these guys were blowing all their money to look rich. They were spending their money to look rich, which kept them broke, but I was looking broke, but I was using all of my money to become wealthy. I was buying the cheapest clothes that I possibly could from Meijer, which is a local grocery store here in the Midwest. I was living small and I was not trying to spend any money because I wanted to stack cash and I was trying to build up my bank account. I knew I didn't want to play that same game, and you see it happen all the time nowadays on Instagram where everybody's trying to show off all the stuff that they keep buying, and it's a game of chicken. You're trying to buy all this stuff to keep up with all of your friends, and it's a game to see who's going to become broke first. The reason why this is so hard is because we get insecure. We get insecure about what people are going to think of us. If I don't got the newest stuff, if I don't got the nicest clothes, if I don't have the biggest house, if I don't have the nicest car, what are people going to think of me? But who cares? Once you get past the hurdle of what people are going to think of you, you're going to see this wide blue ocean of opportunity, because now you're not competing for the pennies. You're not competing against everybody else. You're living in your own world. It's so much more peaceful, and there's so many more opportunities waiting for you. Third, you need to know what's important to you and align your spending accordingly. The first thing for me is my wife and my family. How you manage this in your household is up to you, but for me, it is my duty to make sure that I take care of my wife. It is my duty to make sure that my wife has everything that she needs, everything that she wants, because she's always been there for me, and I know that she didn't grow up with anything either. Same with my parents. My parents came to this country with very little. My dad had less than $100 in his pocket, and they worked their butt off. They didn't know the language, they didn't know the culture, but they knew how to work, and because of all the sacrifice that they made for me, I gave them a little piece of my business. That way every year when I write my distribution checks, I give a check to my parents. That way I know that I can take care of them financially. That's on the taking care of side. Then when we talk about my spending, I want to spend my money on the things that are important to me and not waste my money on the things that aren't important to me. I don't care about name brand clothes. I don't care about carrying some sort of status. I don't care what people think about me. What I do care about is living a life that I enjoy. One of the things that I like is traveling in style, traveling in luxury, because growing up, when I used to go to India from America is like a 20 to 25 hour flight. And sitting on a plane for 25 hours like a sardine in economy class is one of the most uncomfortable things in the world. And when you do that again and again and again, it really starts to get to you. And every time I used to walk on a plane, I would walk through the first class and the business class seats, where they used to have this whole compartment. You could sit there, you can recline, you can lay down, you have somebody that addresses you by your first name. And I always wondered what it'd be like to be one of those people sitting in the big seats. Now when I travel on these long flights, I will pay 5 times more for that seat that lays down, that has that compartment, because it's more comfortable. I can do my work, I can sleep, I can be rested, and I can buy my time back. When I sit in the back in economy, I'm gonna land and I'm gonna be exhausted, and I'm gonna need another day or a day and a half to rest and recover from a day of not sleeping on the plane. But when I sit in the first class or the business class and I lay down and I can sleep on the plane ride, I wake up and I land and I'm completely refreshed. I'm ready to go. I got my time back. I wanna go back to the topic of mindset, because this is so funny. When I used to go and stay at hotels, I used to stay at places like the Ramada Inn, try to pay like $35 a night and cram as many people into one hotel room as possible. And when I used to do that, I used to laugh and make fun of people that were staying at these expensive hotels. Oh, who wants to pay $600 a night to stay at one of these fancy hotels when you can pay $35 a night split amongst 6 people to stay in this nasty, tiny little motel? It's the insecurity that we have inside of us. I was insecure about the amount of money I had. I was insecure that I'd never be able to have things like that. So I put up the smoke screen as an excuse as to why that is not as nice as to stay in this nasty little hotel room. 4, drive your car. Don't let your car drive you. The first time I made $1 million in a year, I was driving a car worth $500 on a good day. Today, I'm still driving that car, and it's missing a bumper. What kind of person drives a car worth less than 1 day's income? This guy. I like nice cars. I'm thinking about buying the BMW i8 when they release it next, but I don't have this need to go out and buy a car just because I have money. I've seen the other side. I know that I can go and take $100,000 today and go out and buy a car and it won't really affect me, but the $100,000 can provide me so much more value if I invested into something that's actually going to create more value. But you also gotta pick and choose your battles. When my wife and I got married, she was driving a car that was worth maybe a couple $1,000s. She likes nice things more than I like them, and I don't want her driving around in that beat up car. So we went to the Mercedes dealership, we went to the Audi dealership, we went to the BMW dealership, and she looked at a few cars. She found a Lexus that she liked. We went back there the second day and we bought the car with cash, and it was done. She drives a very nice Lexus. I drive a not so nice car, but I will when I'm ready to buy it. Plus, I get a lot of enjoyment when I have a business meeting with somebody and I show up and they expect me to pull up in a really nice car, and then I show up with my piece of crap. They get really confused, and then I buy their property off of them. 5th, you gotta show up. The first time I had any sort of real business experience was back when I was in high school. I got very fortunate to get a business internship with a very successful business person. It happened completely on accident, but I had this internship, and my first day on the job, I was supposed to arrive in this person's office at 9 a.m. I got there fashionably late at 9:04 a.m. and he chewed me up in front of every single person. This guy was the CEO of a big time consulting company, and he was willing to give me his time. And so for me to be late was an insult to him, and he made sure that I know. He told me how valuable his time was, and the fact that I am late shows that I don't care about his time. After that, I started showing up on time. I am not the most talented person, I am not the most smartest person, but what I am is a very hardworking person, and that is the skill that I will not let somebody else beat me at. Some people have a lot of hate towards wealthy people because they say that wealthy people got lucky, but the reality is the harder you work, the luckier you get. 6, spend your money on value, not the price. You will never become wealthy by pinching pennies because at the end of the day, a penny saved is, well, just a penny. Most people have a limited mindset. They think that this is all the money that there is in the world, and they're trying to squeeze as many pennies out of this pie as they can. My goal isn't to squeeze every last penny out. My goal is to figure out how I can expand the pie. That way I can get a bigger share of a bigger pie. Think of it this way. If you wanted to go out and sell your house today, it's worth $500,000, and a real estate agent says that they'll be willing to sell your home, but they want 6% commission, what do most people do? Most people are going to say, well, let's see if we can work together to bring a commission down to 5% or 4.5%. That way you can keep more pennies on your home. But what I like to do is I'm going to say, okay, you want 6%. How about this? If you can sell my home for over $500,000, I will give you 7% commission. I want to pay my salespeople more, and I want to incentivize them to sell. Because if the only way they get paid is if they sell my property, if they sell my asset, I don't want to cut their commission. I want to pay them more. Because now when they're marketing my property or my businesses or my assets to other people, I want them to be incentivized my property and my assets and my business more than anybody else's. And if they know they're going to make more money off of my stuff than somebody else's stuff, which one do you think they're going to be pushing harder? Mine. Because they're going to walk away with more money. Most people hate the idea of somebody else making a profit off of them. But I don't care if somebody makes a profit off of me as long as I'm getting the value that I'm looking for. 7, invest early and invest aggressively. If you start investing when you are 21 years old and you keep investing until you're 65 and you invest $500 a month, you never raise it, but you start investing $500 a month when you turn 21, and you can get an average 7% return. So we are talking about a below average stock market return. And this doesn't mean you have to get 7% every single year, just an average of 7%. Some years more, some years less, but an average of 7% a year. If you do that, after your time of investing, you will retire with $1.8 million in your account. Now, I know the goal isn't to have a traditional retirement, but we're just talking about your investment money compounding. If you can invest a little bit more aggressively, where now you're investing $600 a month, so another $100 a month, and you can get the same 7% return, now your money is going to grow to $2.2 million. An extra $100 a month over the course of 44 to 45 years is going to make you hundreds of thousands of dollars more, assuming that you start investing early. But if you start investing later, it's going to cost you. If, on the other hand, now you start investing not when you're 21, but when you're 35 years old, and to make up for lost time, you start investing $1,000 a month, and you do that every month, and you get the same 7% return. Well, now you're not going to have $2.2 million. You're not going to have $1.8 million. You're only going to have $1.2 million. Now, I know $1.2 million is still a lot of money, but you're leaving a lot of money on the table. You have the opportunity to make millions of dollars more if you just start investing earlier and if you can invest more aggressively. This brings to money law number 8. You want to live small when you're young. Time is the most important factor when it comes to compounding your money. If you can spend your 20s and even a little bit of your 30s building that cash, building your investments, that can pay off for the rest of your life. Dave Ramsey says it the best. He says, live like nobody else right now. That way you can live like nobody else in the future. Listen, if you're in your 20s and you're making under $500,000 a year, you should not be driving a Benz or a BMW. This is cash that you should be stacking right now, building your wealth. That way you can have real financial freedom and real wealth as you become older. The bigger your sacrifice is right now, the bigger your payout is going to be in the next decade. Automate your investments. A lot of people nowadays, especially young people, like the idea of investing their money themselves. You open up your own stock brokerage account, you want to invest your money, which is great. I'm a full supporter of that. But instead of just trying to invest your money yourself, also automate some of your investments. Create a passive investment strategy where you have some cash every time you get paid going into a few ETFs. An ETF that's giving you exposure to the S&P 500, an ETF that's giving you exposure to the stock market, an ETF that's giving you exposure to innovation, an ETF that's giving you exposure to emerging markets. You pick whichever ETFs you want, but every time you get paid, just have some of your money automatically go into these ETFs. That way you can constantly get exposure to the market, and now you can just let your money do its thing. It's passive, it's automatic, and it's consistent, and you don't even got to worry about it. This is the strategy that Warren Buffett recommends. He says pick an index fund. You can also pick ETFs. You just pick some of these funds and you just keep investing your money. They're low cost. They give you exposure to the general stock market. Now as the economy grows, you get your piece of the upside. The way I have it set up is every Wednesday, I have money that's automatically withdrawn from my checking account and it's invested into a few different ETFs. Some ETFs give me exposure to the general stock market, the S&P 500. Some ETFs give me exposure to emerging markets, and some ETFs give me exposure to innovation. I use a platform called M1 Finance. They're a sponsor of Minority Mindset. And if you want to learn more and see how you can set up passive investing, I'll put the link to how you can do that in the description. Number 10, make sure you have the right money teachers. I love YouTube because YouTube is decentralizing education. Now, you don't have to learn from a boring teacher in a classroom. You can learn from anybody you want, and you can learn from people that are actually doing what they teach. The downfall is now you have to pick the right teachers. There are people on YouTube that are advocating that you shouldn't work. There are people on YouTube that hate the idea of hustling hard to achieve your dreams. There are people that talk about why it's evil and immoral to go out and try to achieve wealth. And then there are people that are talking about and advocating why you need to become wealthy and why you need to become successful and why you need to invest your money. One of the best things that I did was cut out all the toxic education in my life, because growing up, that's what I was told. I was always told not to talk about money, not to think about money. Money is bad. You shouldn't worry about money. But at the same time, I kept seeing everybody close to me and my parents, my family friends working their butt off to get a paycheck. And it didn't make any sense. Why are you working so hard to make money, then at the same time you say you shouldn't worry about money? I knew that I wanted to become successful, so I started learning from successful people. I started reading books and I started learning from what they did. I didn't know anybody that had done what I wanted to do. I didn't know any investors. I didn't know any real estate investors. I didn't know any entrepreneurs, but I knew that's what I wanted to do. So that's what I started learning, and I learned from people that did exactly what I wanted to do. Number 11, you have to separate your wants from your needs. You need a home. You just want to have a 4,500 square foot mini mansion. You need a car. You just want the heated steering wheel. You need food. You just want the extra guac. You gotta spend your money on your needs, but then when it comes to your wants, you want to spend your money on your wants smartly. You want to make sure you can buy things that you can afford, and you want to make sure you actually buy the wants that you really want, not the wants that you kind of want. That means you have to first ask yourself what's important to you. That way you can splurge on those things and not waste your money on the things that are not important to you. And then you can follow what I call the 24-hour rule. The 24-hour rule says that before you go out and buy something new, take 24 hours and just think about it. Think about if you need it and if you want it, because if over those 24 hours you realize that it's not that important, well, then you don't gotta waste your money buying it. Number 12, if you don't track your money, it's going to leave. One of the simplest things that you can do to prevent your money from leaving is to create an Excel spreadsheet tracking your money. You can handwrite this if you're old school. I like to use Excel. All you have to do is you create a sheet and you write how much money you made this month, how much money hit your bank account, and then you're gonna break down your expenses. So you pull out your credit card statements, you pull out your debit card statements, you look at your bank statements, look at where all your money went. Now you can categorize it. How much money did you spend on food? How much money did you spend on your rent or your mortgage? How much money did you spend on your utilities? How much money did you spend on your subscriptions? And now you tally this all up and you can see how much money you have left over. Then you can look at how much money you invested, how much money you donated, what you did with all the other money. But then you can start to see where all of your money is going. And then you're gonna see how much money you're spending on food. You're gonna see how much money you're spending on utilities. You're gonna see how much money is being wasted onto things that you don't even know that you spent money on. If you're not tracking your money right now, I promise, if you just trust me and try it for 3 months, you are gonna notice a big change in your finances just if you see what you're doing with your money, because you are essentially going to be grading yourself. You're gonna look at your money, you're gonna see what you're doing with it, and now you're gonna be grading your finances. And this can be hard to do because nobody wants to really look face to face with what they're doing with their money, but it can drastically change your money if you just see what your money is doing. 13, do not abuse your credit card. I love credit cards. I only spend money with my credit cards because my credit cards give me perks, they give me rewards, and they give me cash back. Now, I've been fortunate where I've never paid a penny in interest to my credit card companies because I always pay off my entire credit card balance in full and early, so I never have to worry about ever paying interest. But one of the reasons why credit card companies are able to offer so many perks and so many rewards and so much cash back is because they have a lot of people that are funding all of their rewards and perks and cash back. It's the people that aren't able to pay off their credit card in time, because now you're paying 25% interest on the $400 TV. One of the hardest financial holes to pull yourself out of is credit card debt. So the smartest thing that you can do is to avoid it altogether by being smart with your credit card. Now, maybe you're scared of credit cards. That's how I used to be. I read some Dave Ramsey books and then I was completely scared of credit cards, so I never used it for years. But then I started to get used to credit cards and I knew that I wasn't going to overspend my money because I know how to spend, and now I get thousands of dollars with the cash back. But I know how to use my credit cards, which is why I'm able to use my credit cards. But if you don't know how to use your credit cards, you are going to be the one that's getting abused expire credit cards, where at that point, it doesn't make sense to use a credit card. 14. Focus on your strengths and don't try to be good at everything. When I was really young, my dad hoped that I would one day become the spelling bee champion. I don't know how he thought that I was going to be the spelling bee champion. My parents are immigrants. English wasn't really spoken that often in my house, and I did not do very well in my English classes. That was the class that I struggled with the most. But for some reason, my dad said that I should go out and become some spelling bee champion. And so I would look at the dictionary. I couldn't read the words that I was reading. I didn't understand it, and I couldn't get anywhere. That's when I quickly realized that I can't be good at everything. There are some things that I'm not good at. I'm not a very good reader, which is why I listen to Audible. I'm not a very good writer, which is why I don't write a lot of stuff. You have to know what you're good at and foster that, because if you're good at something and you like it, well, then it's a lot easier for you to work in that and be the best at that, and you can make a lot more money if you're really good at something than if you're just working hard at something that you suck at. Nowadays, entrepreneurship has been glorified, but not everybody can run a company. Investing is very important, but not everybody can pick their own investments themselves. Some people are better off with a money manager. Some people are better off just investing in ETFs and index funds. You have to understand yourself. And funny enough, I was never good at reading. I was never good at writing. Yet one of my companies, marketbriefs.com, is one of the fastest growing financial newsletters on the internet, because I was able to put together a team of very smart writers who can write way better than I can. Number 15, keep learning and apply the 1% rule. One of the hardest things about becoming successful is seeing slow, steady improvements, because everybody wants to see the tip of the iceberg. Everybody wants the success. Everybody wants the fame. Everybody wants the money right now. But nobody wants to put in the steps to get there. You just want to see the success. But the way that you get there isn't by making this massive leap, it's by taking small, steady steps. If you can just get 1% better at what you do every single day, then every year you are going to get 37 times better through your slow and steady 1% improvements. One of the easiest ways to do that is just by learning. Start reading books. Read Rich Dad Poor Dad by Robert Kiyosaki. Read a book by Dave Ramsey. Read Gary Aldridge's book on real estate investing. Just start reading a little bit every single day. Even if you only read 20 pages a day, that's 600 pages a month. That's 7,200 pages a year. And the little bit of reading each day adds up to an extra 20 to 25 books that you can read every single year. Now, if you stack that year after year after year, now you start to compound your education. A few months ago, I installed a pull-up bar upstairs in our office, and I made a rule where every time I go upstairs, I'm going to try to do 20 pull-ups. Now, if I keep going upstairs, I'm not going to be able to do 20 pull-ups, but maybe I can get 5, or maybe I can get 10. And now these little pull-ups I'm doing every day are starting to add up. I might do 50 to 100 pull-ups in a day just because I went upstairs and I have to do some pull-ups. But that starts to add up every single day. If I do 50 pull-ups a day, that's an extra 250 pull-ups a week if I'm in the office Monday through Friday, just by going upstairs and doing a little bit of pull-ups every time I walk upstairs. Albert Einstein says that when you stop learning, you start dying, which is why you need to keep investing in yourself and you need to keep investing in your education. And if you do want to learn more about how to invest in stocks, real estate, and crypto, you can check out our Market Insiders program, where you get weekly coaching sessions all on demand, and I'll put that link for you in the description. Number 16 is stop buying liabilities and buy more assets. Liabilities are things that you buy that take money away from you. Assets are things that you buy that put money in your pocket. Now, when we grow up, we're all around liabilities. We're told to buy a nice car. We're told to wear nice clothes. We're told to have a nice place to live. We're told to have nice shoes. We're told to spend money on all these things, and it's very common for us to do that, but we're never told to buy assets. We're never told to buy shares into the companies that we're spending money on. And that's one of the easiest ways that you can start investing, even if you've never invested your money before. Just invest your money where you're spending it. If you're going to go out and spend $100 at the Apple Corporation, you're going to go out and buy something from Apple, spend $200 buying the Apple stock. If you're going to spend $100 on Amazon, spend $20 buying the Amazon stock. This is an easy way for you to start investing your money, even if you've never invested your money before, because you're already spending your money at these companies. You might as well own a piece of the company itself. That way now when these companies make money, so do you. And as you start to do that, you're going to start to realize that some of the companies that you invest in are good investments. Some of the companies that you invest in are not so good investments. And that will help you learn more about how to invest your money and where you should be investing your money. Law number 17, more money just solves one problem in your life. Having more money will solve one problem and one problem only. It will solve the problem of how much money you make. It's not going to fix your marriage. It's not going to fix your anxiety. It's not going to fix you being fat. It's not going to fix you being depressed. It's not even going to make you wealthy. The only thing that it will do is it's going to change how much money you make. If you think that making more money is going to solve any one of these problems, you have another thing coming. If you want to live a healthy lifestyle and you want to live a happy life, you need to know how money plays a part in your life, and you need to understand how to be a good person in every different aspect of your life. You need to be physically fit. If you're more morbidly obese, it doesn't matter how much money you have. The only thing on your mind is how to be healthy again. If you're not mentally fit, if you're anxious or you're depressed, it doesn't matter how much money you have coming in. The only thing you want to be is happy again. Get that taken care of, whatever the cost is. If you're not spiritually fit doesn't mean religious. It means you don't have a purpose. You need to have a reason for why you get out of bed every single morning. If you're not spiritually fit, you're going to feel miserable. You need a reason to get out of bed. You need a reason to conquer your days. And then you got to be financially fit. Financially fit now allows you to live the life the way you want financially. But just because you're financially fit doesn't mean that everything is going to magically fall into place. Number 18, different risks come with different rewards. There's a reason why entrepreneurs have the opportunity to make so much more money than somebody who's just saving their money in the bank. It's because the entrepreneur is taking on a whole lot of risk. It's the same reason why somebody investing their money in the stock market or in real estate has the opportunity to make much better returns than somebody who's just saving all their cash in the bank. When you put all of your cash in the bank, you get zero returns because you have little risk. If you deposit $1,000 in the bank today, you know that if you go back to the bank in a month, you'll be able to pull this $1,000 out of the bank. But if you take this $1,000 and you use it to go out and invest your money in the stock market, well, you never know what's going to happen. You have to research your companies. There's a chance your company might go down. There's a chance your company might go up. You're taking on more risk, so you have the opportunity to see better returns. In general, there are always exceptions to this, but in general, the higher risk you take, the higher potential returns that you will see. That's why starting your own business has some of the highest potential returns, because it also comes with your highest risk. When you start a business, now not only are you investing your money, but you also have to invest your time. Maybe you have to get investor money. Maybe you have to raise debt. You have to go out and try something. You got to sacrifice your job. You got to sacrifice everything in your life for a product that maybe will work, maybe it won't. That's why you have a chance that you'll see massive upside, but there's also a chance that it will completely bust and you lose everything. Depending on where you are in your stage of life and investing and finances, you're going to be able to take on different levels of risk, and that level of risk is going to dictate how and where you invest your money. Number 19, cash flow trumps cash, because still cash is daddy cash. When cash is still, it's not doing anything and it's not making you any money. Your cash is still when you save it, when it's sitting in your bank account, when it's sitting under your mattress, it's just doing there nothing. It's not making any money, it's not growing, and it's actually losing value to inflation each and every day. That's why your still cash is dead. Cash wants to be moved. It needs to be invested. You need to put it into things, into assets that are going to make you more money. And when you put this cash to work and it generates your cash flow, now you can generate a return and you can actually beat inflation, and now your cash is growing. It's going out and attracting friends and making you more money. A lot of people have the goal of saving up $1 million one day, but $1 million in the bank is losing value each and every day to inflation. So if you have $1 million in the bank, that's great. But if you have 7% inflation, that $1 million is losing $70,000 worth of buying power each and every year, just because it's not doing anything. If you can take this $1 million and put it into an asset that pays you with 7% return a year, now that $1 million is generating $70,000 worth of income each and every year, and you also own that asset. You want to own the cash flow, not just the cash. If you have the cash, turn it into some cash flow. And rule number 20, the tax code benefits the wealthy and the financially educated. Look, I'm an attorney. I'm not your attorney, but I am a licensed attorney. But the thing that you have to understand about the tax code is the tax code is just a rule book. And the rule book tells you how the tax code works and what is going to be taxed. So what wealthy people and financially educated people do is they learn the rules of tax. That way they can legally avoid tax. They don't evade taxes, because evading taxes is illegal and that will send you to jail, but you can legally avoid taxes, which is what rich people talk about doing all the time. And if you know how to legally avoid taxes, well, now you can keep more money in your pocket. Again, money is not emotional. It just is what it is. But if you learn the rules to the system, if you learn the rules to the game, then you can learn to use it to your advantage. The nice thing here is you don't have to be a millionaire to take advantage of the tax code. You just have to understand what the tax code is. Now, the easiest way for you to do that is to either go out and read the tax code, which is extremely difficult, but the easier way to do that is to go out and hire an accountant. That way now you have somebody whose sole purpose and sole job is to help find ways for you to pay less money in taxes legally. That's what accountants are paid for. How much money you make is not important. What's important is how much money you keep, and one of the easiest ways to keep more money is just to find ways legally to pay less money in taxes, and the tax code does allow you to do that if you know how to take advantage of it, which is why you need to have somebody who understands how you can take advantage of the tax code. What's up, everybody? If you want to continue building your financial education, I linked a relevant video here that I think you'll love, and as an added bonus, I have a free guide on how you can start generating passive income that you can download and read for free. All you gotta do is click that button, below.
What was the path for you to make your first million? Because you were in your 20s.
Yeah, 25 or 26.